There are two stocks right now that are on the verge of running, and Alpha Breakout Lab is watching both of them. One is a space company that just landed a contract worth over $1 billion. The other is a tiny pharma stock that has grown its revenue for 19 consecutive quarters straight. We are breaking both of them down today, the good, the bad, and our exact strategy. Stay until the end because stock number two might surprise you. Have you been watching either of these stocks? Drop your answer in the comments right now. We read every single one. Welcome to Alpha Breakout Lab, where financial education is completely free for everyone. No paywalls, no courses, just real information to help you make better decisions. Let us get into it.
Stock number 1, Rocket Lab USA, ticker RKLB. As of today, Rocket Lab is trading at $67.73 and rising, up over 5% just today. And there is a very specific reason for that move. This morning, Germany's federal ministry approved Rocket Lab's acquisition of Mynaric, a Munich-based company that makes laser optical communications technology for satellite constellations. This is not just a news story. This deal is directly tied to a $1.3 billion prime contract with the United States Space Development Agency to build 36 satellites. By bringing Mynaric in-house, Rocket Lab just locked in a critical piece of its own supply chain. Now look at the bigger picture. Over the past year, Rocket Lab is up 221%. The 52-week range is $14.71 to $99.58. The contract backlog stands at $1.85 billion. Revenue is running at nearly $600 million annually. Analyst consensus price target is $89.36. Stifel reiterated their buy rating and $90 target this morning. Clear Street has the highest target on the street at $120. Now here is the honest breakdown. No hype, just facts. The bull case is strong. The Mynaric deal resolves a major supply chain problem tied to over $1 billion in government work. The stock is still 34% below the analyst consensus. And the SpaceX initial public offering buzz is lifting every space stock on the market. Rocket Lab is the best pure-play public space company you can actually buy today. But let us be real about the bear case too. Rocket Lab is down 32% from its all-time high of $99.58. The company is still not profitable. The Neutron rocket is still unproven. And historically, when Rocket Lab announces acquisitions, the stock tends to dip in the short term even when the deal is strategically positive. Then there is the war factor. Global defense spending is increasing, which is a long-term tailwind for Rocket Lab. But macro uncertainty causes short-term volatility across all sectors, including space. Do not ignore that. Our strategy: this is still a buy, but be patient. If you do not own it yet, wait for a pullback. Wait for the price to come to you. If the relative strength index hits oversold at 30, that is your entry signal. If you already hold shares, the Mynaric deal is a meaningful long-term tailwind. Hold your position. Stay with us, because stock number 2 is a completely different animal. A tiny pharma company with 19 consecutive quarters of revenue growth and analysts who just raised their price target by 40%. That is coming up right now. Real quick, if this free information is helping you, please hit the like button and share this video. It costs you nothing and it helps us reach more people who need this education. Subscribe and hit the bell so you never miss a free stock alert. We drop them every single week. Stock number 2, Eton Pharmaceuticals, ticker ETON. As of March 31st, 2026, Eton closed at $22.58. Over the past 12 months, this stock is up 272%. The 52-week range is $11.09 to $24.46, which is the all-time high. Now, here is what makes this company special. Eton focuses exclusively on rare diseases. They have 6 commercially approved products, including Increlex, Alkindi Sprinkle, and Galzin. They have additional pipeline products expected to launch in 2026. The company just reported fiscal year 2026 revenue guidance of at least $110 million. And in the fourth quarter, they turned earnings positive, 5 cents per share versus negative 2 cents a year ago. Here is the number that matters most: 19 consecutive quarters of sequential revenue growth. That is nearly 5 years of uninterrupted growth. That is not luck. That is execution. And the analyst just noticed. H.C. Wainwright raised their price target from $37 to $52 on March 20th. Craig-Hallum raised to 35. B. Riley raised to 31. All three are strong buys. The average upside from today's price to the highest target is over 130%. Here is our honest take on Eaton. The bull case is real. 19 consecutive quarters of revenue growth is extremely rare for a small-cap pharmaceutical company. The business model has pricing power in ultra-rare diseases. These are drugs that have very few competitors and very loyal patient populations. The analyst upgrades are recent and backed by a clear growth thesis. Now the chart. Eaton is consolidating right near its 52-week high of $24.46. The short-term relative strength index is elevated, which means a pullback is possible and actually healthy. But here's the key read. Two scenarios play out from here. Either the stock dips and the relative strength index reaches oversold at 30, which would be your ideal patient entry, or the consolidation holds and Eaton breaks out above 24.46 to brand new all-time highs. Our strategy: this one could dip, but we would still buy it. If you're patient, wait for the relative strength index to hit 30. That is the best entry. If you are more aggressive, buying into the breakout above 24.46 is also a valid play. The fundamentals back up both approaches. But here is the honest risk. This is a small-cap pharma company with only 31 employees. Any pipeline setback or regulatory surprise can move the stock sharply in either direction. You are buying near the all-time high. Size your position appropriately. Do not bet the house.
Let us bring it all together. Two very different stocks. Two very different risk profiles. One goal, giving you the honest information you need to make your own decision. Rocket Lab, trading at $67 today, up 5% on the Minorig deal. Analyst target of $89. A long-term space infrastructure story with real government contracts backing it. Strategy: wait for a better entry or scale in slowly. Eaton Pharmaceuticals, trading at $22.58. 19 consecutive quarters of revenue growth. Analyst target of $52, that is over 130% upside if they are right. Strategy: wait for a dip to oversold or buy the breakout above the all-time high. See you in the next alert, which is a stock that I own myself and you don't want to miss. As always, this is free education only, not financial advice. Do your own research. Talk to a licensed financial advisor before you make any investment decision. If this free stock alert helped you, hit the like button and share it right now. Subscribe to Alpha Breakout Lab and turn on notifications so you never miss a free alert. We drop new ones every single week. And follow us on Facebook, Instagram, TikTok, and YouTube. Links are below. Follow Alpha Breakout Lab for free stock alerts every single week. Builders do not sleep until the dream is real.